Vaibhav. In today's session of Visual Jforex, I will be demonstrating to you the use of indicator named linear regression intercept. This is an indicator which is, as the name suggests, based on the linear regression. In last couple of sessions also, we had seen other two indicators based on linear regression. This indicator is interesting one, and this we will be utilizing to see the divergence whenever there is a volatility in the underlying instrument. There is a divergence created in the chart, and as a result of that we can get to know whenever there is spurt in the price, and try to look for the opportunities to make profitable trades. So here the basic idea behind the trade is going to be like this. Whenever we see that after having been in the consolidation phase, and I am also going to add one condition that for the buy trade, let us first talk about the buy side trade. So whenever we are looking for a buy trade, the recent candle, it might be the last candle or the candle prior to that. So we will be looking the shift value of around 2 or maybe 3. That candle should have closed below this linear regression intercept value. And then there is a sudden spurt in the price action, and the last 15-minute candle, we are going to build this algorithm on the 15-minute time frame, should have shown good buying momentum, and by good I mean good enough. So for that we will have to define certain pips, and minimum pips can be defined as per our observation, as per the ATR. Also we can keep it dynamic, or we can even provide a fixed value. So there should be that much difference between the opening price and the closing price. Closing price should be on the higher side, and whenever you see, if you observe on the chart, whenever there is sudden spurt on the higher side, the linear regression intercept jumps on the opposite side, and as a result of that this divergence is created. So we will be looking at this divergence value, and this should be greater than a certain predefined pips. So if we take this example here, and this was around 12:45 GMT today, and this closing value is around 1.21, 1.2135, and the linear regression intercept value at the same time is 1.2125. So the difference is of around 10 pips. And prior to that, if we go back in time and if we take the shift 3 candle, then it had closed, not really, it had closed above it. So this time around the trade won't be executed. But if we look at this one also, then there is this fulfillment of the condition that prior candle should have closed below it, but there is not enough of divergence. And also, as I wanted, there should be good enough difference between the linear regression intercept value and the closing value of the last 15-minute candle. And I think 10 pips value is good enough. So for the buy trade, the conditions are like this. The historical candle of 15 minutes should, with the shift value of 3, should have closed below the linear regression intercept value, and then there should be difference divergence of at least 10 pips or more than that between the closing value and the linear regression intercept value. The linear regression intercept value should be in decline, and also the difference between the opening and the closing price of the last historical candle of 15 minutes should be at least more than 5 pips. So these are some of the conditions for the buy side, and vice versa for the sell side trade. And I think we will have to look for some condition, some examples. Let's see if this will fit the bill. This closing value is 1.2118, and the linear regression value is 1.2127. So it is less than 10 pips. We will have to look for the instances where there is at least 10 pips divergence between the closing value of the 15 minutes candle and the linear regression intercept. maybe this one, but then the prior historical candle should have closed above it, and that condition is not going to be fulfilled in this case. This one 1.2022. Okay, so here this condition is going to be fulfilled. Prior historical candles have closed above this linear regression intercept, and also the linear regression intercept value is also on the rise. That means divergence is created, there is good enough volatility, and as I said, one more condition is required, that the difference between the opening price and the closing price should be more than 5 pips. We will have to define that condition, and I think this is looking good enough. So somewhere here the trade will be initiated, and let us see how it might have closed. So depending on the combination of the stop loss and target price, first it is going to go in the loss of around 10 pips if we go for the market execution, and then it declines to around 10-12 pips on the lower side. So net and net, the outcome might have dependent on how we define the execution, and then the stop loss and the target price ratio. So this is the logic behind this algorithm using the linear regression intercept. So in today's session, I will only add to the Visual Jforex board the required indicators. This is the Visual Jforex board which has been developed by the Dukascopy Bank SA. First, we will do the instrument subscription. This algorithm I will build on the on tick start point. So this will be the point to initialize the trade setup, and to do the instrument subscription and set the position amount condition which we need to be set at 0. I will need first 3 blocks, and then I will also add the indicator blocks. So first thing first, default instrument needs to be taken into consideration, and default instrument should match the on tick instrument, on tick instrument, and this last tick instrument in turn should be the instrument of our choice. So first, we are simply going to work with the Euro USD, so I am not making any changes here. And instead, I will have to now look for Euro USD in this list. And okay, I got this Euro USD. Euro USD is the default instrument, which should be equal to the last tick instrument, and then the tick instrument should be Euro USD. So this makes sure that only on the desired instrument trades are generated, not on other pairs. And we also have to see that all the position amount, whether it is pending or the open position, it should be set at 0. That means the trade will be initiated only when there are no orders or no open positions in the account. Now I will color code this also, so we find it easier to spot any discrepancy in the trade flow. Coming to the indicator, is included under the mathematical indicators, linear regression intercept, third from the top. And this setup we are going to build on the 15-minute time frame, and to carry out the comparison and also to set the condition of the price action, I will need at least 3 linear regression intercept blocks. This is as per the initial estimate. If we feel like we need to add some more, we can add anytime. For the time being, this looks good enough. This should be changed to 10 minutes. Shift value of 1. This also needs to be changed to 15 minutes. Shift to again here 15 minutes. And this one shift 3. We will be retrieving the linear regression intercept value for all last three 15 minutes candles. Let us join this. And to do the comparison, I also need to look at the price action, which we will retrieve using the info blocks. Get historical candles, three historical candles of 15 minutes each with respective look back period of 1, 2, 3. Okay, default time period is 10 minutes, which I will change to 15 minutes. Shift value of 1. Here, shift should be 2. Default period of 15 minutes. And the period should be again 15 minutes. And the shift value 3. To make the entry precise, I also need to take to get historical candles of 10 seconds. This we will use to compare the closing values with the 15 minutes historical candle, and only when we see the continuation of the price action in the desired direction for the buy trade, these prices of these historical candles with the shift 1 should be higher than the 15-minute historical candle. We will go into the details when we will be defining the condition on the buy side as well as on the sell side. For the time being, I will just set its input value at 10 seconds. Shift 1 and shift 2. Okay. And with this, we will wind up the session as we are running out of time. And I have included all the required, not all, but still most of the required blocks for gathering the data. And in next session, we will carry out the calculation. We will see that there is good enough momentum on the price side, and divergence should also be as per our required requirements. And for that, we will have to carry out calculations and also create some variables with the desired values and then do the comparison. So for the today's session, I will be signing off now. If you have any query or any idea to share, you can write to me in the feedback section and I will be more than happy to take the discussion forward. Do subscribe to the Dukascopy webinar channel. Thank you all for joining in. Goodbye.